Hello viewers, welcome to my channel. So as part of our company X-ray analysis, today we'll be doing an X-ray on TCS. So viewers, as you know, already a video is done on company X-ray analysis. The first video was on Reliance company. So in that particular video, we discussed about the business model of the Reliance company, their growth drivers, their red flags and their competitors and their future the future growth. So these are certain factors which we focus. So as part of this particular company X-ray analysis series, today we'll be focusing on uh, one of the major Indian IT company, that is TCS. So as most of you might be aware, generally TCS is known for strong cash flow, and this is considered as strong cash flow market leader, and there are certain growth concerns also, and there are certain things which is connected to AI risk also. We'll have a detailed understanding about this particular TCS company. So if anyone didn't watch my previous video on Reliance, so I request you to please watch that particular Reliance video also. So this TCS company founded in 1968, and the parent company of this TCS is Tata Group. And this company TCS is mainly in IT services and consulting. And TCS is considered as India's largest IT company. And TCS is having global presence also. And almost more than 6 lakh employees are working in this TCS company. Now, normally, if you see the financial performance for the financial year 2026, so for Q4, the revenue of the TCS is almost 70,000 crore Indian rupees, and the profit for 2020 for 2026, if you observe, the profit is 13.7, almost 13,000 crores. That is net profit, and you can also observe there is a year-on-year growth of 12%. And most importantly, their total order book is almost around 12 billion US dollars. So this particular 12 billion US dollars is there in their pipeline of their order book. Now, if you see the revenue segment of this particular TCS, if you see the business wide, so normally around 38% of the TCS revenue is from BFSI sector, and around 17% of the business is from telecommunication and media, and 15% business they get it from it means what I'm trying to say, if you see the major clients, around 38% of the revenue is generated from the clients who are connected with BFSI, and around 17% of the revenue is generated from the clients who are from telecommunication and media, and 15% of the revenue is from the clients connected with retail, and around 10% of the revenue is from the clients related to healthcare. So BFSI is a sector. It means 38% of the revenue. It means TCS is generating 38% of the revenue from the clients who are in the business of BFSI. So this you should understand. So 17% of the business TCS is generating from the clients who are in the business of telecommunication and media, and 15% of the business TCS is generating from the clients who are in retail sector. And similarly, 10% of the business TCS is generating from the clients who are in the industry of healthcare. Now, if you observe the business model of this particular TCS, now they do have clients, and they provide the services like outsourcing and digital transformation, and they try to develop a recurring revenue model from these particular clients. Next, if you mainly observe the TCS key clients and the market exposure. So generally, TCS, as I already mentioned, they do have a global presence, and they have a very strong presence in USA. Almost 50% of the revenue they do generate from the clients from USA. And as I already mentioned in the previous slide also, if you observe, BFSI as a major client. So most important thing which you need to know is uh, TCS is serving almost 500. It means the TCS is serving Fortune 500 companies. So this is something which is connected with the client database. Normally, if you see the TCS clients, 50% 50% of the revenue they generate from the clients from USA, and BFSI is a major. The clients who are in the BFSI sector are the major clients, and the TCS is serving for this Fortune 500 companies. It means their clients are from Fortune 500 companies. Then if you see the TCS versus competitors, as I already mentioned, TCS is considered as the market leader in India related to IT sector. So the major competitors are Infosys, Wipro, and Accenture. And Accenture is considered as a global leader, but when it comes to India, TCS is considered as a market leader. And the major competitors in India, Infosys, Wipro, HCL, now these are certain major competitors. Now, if you see the market position, as I mentioned, it is considered as the number one IT company in India and almost contributing 25% of the industry margin. So almost 25% of the IT business is done by the TCS company. And if you say the Infosys, it is around 20 to 21%, and HCL it is around 18 to 19, and Wipro it is 16 to 17%. So TCS is considered as a market leader, which is contributing almost 25% of the industry requirement. Then if you see the major growth drivers, because for a IT company, the growth drivers are going to play a very significant role for their future sustainability or nothing but for their future business point of view. So normally almost 2.3 billion dollars they are generating. This is a very important key performance indicator which you need to understand. Now TCS is managing to generate almost 2.3 billion US dollars by using AI, cloud transformation and digital banking expansion. So they are using as it means there is a significant usage of AI in the business model of TCS. Now if you see the TCS AI strategy, TCS almost trained 180K workforce. It means they trained almost 180K workforce regarding the usage of AI, and almost they are doing more than 5,000 AI projects. So it clearly says that that TCS is significantly uh, investing to develop a AI infrastructure, and because as an evidence for that, they trained almost 180K workforce on AI, and they are training. It means they do have AI connected projects which is more than 5,000. And if you see the order book strength, so normally, as I mentioned at the beginning of the video also, for the quarter 2026, for Q4 2026, now the total order book value of the TCS is $12 billion, which are in pipeline. Then if you see the main cash flow strength here, you can observe that the free cash flow is more than the 100% of the profit. So TCS is known for generating the strong cash, nothing but they do known for a strong cash generation. And the TCS, if you see from the last 3 to 4 years, they paid a high percentage of dividend also. So the TCS, when it comes to the performance point of view, their profits are good and their free cash flows and accordingly high dividend payout. Then if you see the TCS workflows strategy, now they mainly focus on three elements: scalability, stability, and transformation. So as I mentioned, more than 3 lakhs workforce is there, and they do have an attrition of almost 12% every year, and they're continuously focusing on their restructuring process. And if you see the major red flag for a TCS is slow growth rate. And another major red flag for TCS is around more than 50% of their revenue is from the clients from USA. So these two are one of the major red flags of this particular TCS company. That is slow growth rate and maximum dependency on US clients. Then, if you see IT sector risk environment, if you try to understand the risk environment of the IT sector, because you need to know how volatile the industry is. So there is a effect of global recession impact. So normally, always do remember the first industry which will be affected when there is a recession is the IT sector. So there is a global economic slowdown, and even the clients, because as I mentioned, the moment there is if there is any effect of recession, generally clients try to spend a minimum amount on IT, because the first element which they do consider to cut down their cost when there is a downturn in an economy or when there is a slowdown in an economy is to they want to cut their cost on their IT infrastructure. And if you see the TCS versus competitor threats, so always you need to understand this. TCS is, if you see the faster growth momentum, Infosys is also faster growth, and Accenture is considered as a global market leader. And the Wipro, the company, Wipro is mainly focusing on they do have a margin pressure. Now, normally in my future videos of company X-ray analysis, I will be doing a video on Wipro also, where we'll be having a detailed discussion why the Wipro is facing this particular margin pressure. Then, if you see the stock performance of TCS, so normally the stock performance is stable growth, and if you compare with the other peers of the IT sector, the TCS is experiencing a stable growth. So growth might be slow, but there is a stable growth. Then when you see from the valuation perspective, so the TCS priced at a premium with stable returns, because we can consider that the premium valuation is there, and the premium valuation because of their stability. And one more important thing is they do have a strategy of attractive dividend yield. So the TCS is known for the attractive dividend yield, and there is a premium valuation because of its stability in returns. Then if you see the next 10 years outlook from 2026 to 2036 of this particular TCS. Now, as I mentioned, AI-led transformation, though, because most of the IT companies in the IT industries, they started their transformation towards the AI-led transformation. So even the TCS is also investing a significant amount to develop the AI infrastructure. So AI-led transformation, the AI-driven growth phase, and by next 5 years, that is 2031, there will be a platform-based business model. I will be doing a video also what exactly this platform-based business model, which is going to be very famous in next 5 years, and definitely because of a significant competition and because of AI and all these things, definitely there is a pressure on margin also. So if you see the investment thesis of this particular TCS, the main pros and the nothing but the advantages and disadvantages. So first we'll go on pros. We'll go with the pros. That is, they do have strong cash flows because their cash flows is equivalent to their profits, and the TCS is considered as a market leader. So these two are the main advantage, nothing but pros. And if you see the cons, the disadvantage, the risky element, that is moderate growth. The growth is not as per the expected percentage. Of course, the growth is stable, but the growth is low. So the final verdict about this particular TCS company. So they do have a stable wealth creator. TCS is considered as a stable wealth creator, and investment in TCS is mainly suitable for long-term stable investor. If an investor is expecting for a long period, nothing but if the investor is expecting a long-term returns, and if he want to spend a good amount of time in the market, then definitely TCS would be a right choice. And if someone is expecting strong cash flows and steady growth, definitely TCS is considered as a good choice. So if your investment horizon is almost if an investor investment horizon is around 10 years, so definitely he can accumulate his wealth by putting his investment in TCS. But when it comes to the if a person who is expecting a short-term return, then TCS is may not be considered as a right option. So not ideal for high growth seekers also, because we understood from this particular video that the growth of return is not as per the expected rate. So the pace of growth is less. So if someone is expecting high growth, then definitely TCS is not a right choice. And yes, as there is a limited upside potential also. So the final verdict, the TCS is equal to stability, reliability, and long-term value. And so whatever discussion which we had, so this is done only on the basis of information available. And I always request investors to do your own research before putting your money. So don't fell under the clutches of anchoring bias. So always it is safe, always it is advisable to do your own research before investing. And this particular video is generally created, and this content is for education and information purpose only. And it does not constitute investment advice, financial advice, or recommendation to buy or sell any security. You need to do your own research for investing. All the best, and thank you for watching my video. And I request you to please subscribe to my channel so that I can do more number of videos, and we'll be meeting in next video as part of company X-ray analysis. Thank you very much.